All right, what's going on? What's going on? How's everybody doing? Happy 23 to everyone tuning in. Sound check is coming through pretty good. Got to make sure I got my sounds right. Notice things have been kind of messed up lately. Well, from the last streams. But anyway, let's get right into this. Interesting start to, or bringing us into RTH. Interesting pre-market where we had that 8:30 volatility response to the employment news, where we saw a strong bullish spike. Took a quick break, a little pause at PR plus 1. My chart feels so long. It's at 858. Yeah, 858 and a quarter. But we had a little bit, some more continuation off of that spike. We found some supply in that PR plus 6 plus 7 range. And we've been kind of retracing that. The whole move, we've retraced about a third of it. Got a little ways to go to some MSRP or VWAP and some other things I got on my chart. If I zoom in, we have automation above. Well, we're kind of trading around automation now. And then I have another indicator that I likely pay attention to above what price is currently, around PR plus 4. So we saw the spike, we've seen the spike, nice little bullish run. We've had some retracement, so let's see how this thing opens up in about 2 to 3 minutes. We are officially open. Had to make sure I got my breathing work in before I got started. Still dropping inventory. Bit of a front run there to PR minus +1. I don't know why I always want to call that -1. I think because what brings us here is the selling. Puts me in in the space of what's actually happening, and then I end up calling it -1, but I keep doing it. Also in line with the VWAP. Inventory response off of that area. Not really mechanical, but the response is there. Current inventory is roughly off of 852-ish. Did get inventory response once again above PR +1. It's like 863 roughly. Continuing to lift the inventory. So far, the theme that I've seen is on different levels from different perspectives. Wholesale has been gathering inventory, getting as cheap as they can before they decide to profit off of it. We do have we're back to our normal crowded space. Unlike in December where they had to do more work to build their supply or build their, what I'm calling the warehouse. It's their stack of inventory. Quick setups from a micro level for some breakouts. The only thing I had so far was back at 870 if I wanted to be really aggressive, but that wasn't an actual setup for me. So right now I'm looking at the main inventory. But we got some quick inventory right there at 910. So I just keep an eye on that. Below that it's around like 885. You can also look at 905 as an inventory level. So far, this has been sort of a strong rally. How far can we go? It's been a while since we visited automation. This point is kind of about timing for me with the second half of FTR. Whereas normally I could hang around and wait for it, because eventually this rally is going to slow down.
Yeah.
And then we're going to have set up a shop somewhere for the next move. Continuing to lift the supply back up to PR plus 6. 945 3/4 for the price. That was weird. Had something weird message pop up on my Ninja Trader. Changed some settings yesterday, so might have had something. Need to revert back to the regular stuff. So off of that rally, we're quickly starting to dive back into the inventory. So they're not playing around today. Haven't really set up a shop anywhere. Interesting. It's been an interesting week, like overall, with the price action. But it's not, it's not surprising. As an overall, this has kind of been an overall theme over the last couple of years for January. There's no wholesale indicator. Wholesale is a function of markets. Pretty much the man in the middle, or the group in the middle, or the entity more accurately in the middle. You have retail, then you have, so it's like you hear it more so in business, to where, it's also a term that's frequently used in trading, but you hear it more so in regular business, to where you have your manufacturer that makes the products, and then so they make it at bulk, and then you have wholesale in the middle that buys it at bulk, and they distribute it to basically to the consumer, but the consumer can obtain the product at a retail store, or now e-commerce store. But basically you have manufacturer, then you have wholesale in the middle that works on distribution, and then you have the consumer, right? It's simplified. So in these markets, you have basically your big players, and then you have your wholesale in the middle, and then you have retail, and just all the players, like doing all the participants that's really just doing their own thing with their own personal accounts, basically retail. And the product being, of course, whatever you're trading. So for me, the product would be the NASDAQ Futures. explaining and not prepared. Alright, so we made it back to PR plus 1 where we have a mechanical response. Overall, they're still maintaining the same theme. Back into automation to where we're getting a supply response. I'm actually looking for a break of this 819 area. This is why I've been looking for a trade bias rotation. And the sell strength is still continuing. We still got that selling momentum. Let's see if we can continue to find cheaper inventory. Another supply response off of automation. Strong supply response. To answer that last question, there's a lot of moving pieces on my charts. I don't know if I have like one single. Well, no, I definitely don't have one single like video or anything out there that explains what's on it now. But it's not like, well, I got videos, different videos like explaining different pieces, and I got one video on the wholesale and one video on this power range concept. Well, I got several videos on this. So these lines, the main lines that you see should be the power range lines. A good reference is the course that I put out over the summer here on YouTube. The Futures Trade Summer School. Or the power range. I guess other videos about it too, but and there's just some random indicators that I don't really pay attention to, other than with the exception of VWAP. But really, the only thing that I'm looking at really is structure and price action. I really don't even look at the actual price. I'm only saying the actual price for the stream, to be honest. I look at I'm more of a visual person and more of an energy person, so I'm looking at the energy of the charts. But that's just me. got supply automation right here around 790. Still not really mechanically respecting price or anything like that. They're just doing their thing as they've been doing. I'm taking 2 losers, so if I take this, if this one ends up the same way, this will be my last one. The other days of this week, the strategy has been working out pretty well, but like I say, all strategies work. It's not all the time. Today is one of those days where it's not. The market's really not really participating with the strategy, but it's only one day out of many. So the main thing is consistency. This position, the best case scenario is break even, taking a full loss. That lifted supply, so it's even like where we get in our supply and our inventory from is very non-mechanical. It's like not what we usually see for NQ. As a non-emotional awareness, again, this is temporary. It's a perfect day for the topic, the trader triggers topic of the day. Let me focus. They're talking so much. I was supposed to get out, so I had to just cut it. I missed it. Anyway. So that was going to be my last one for today. This is why, risk management is so important, because consistency is definitely one of the major keys to being in this for the long run. And I know I just got the feeling this thing is going to go back to where I wanted it to go, at least for the break even though it was flashing to that previous support around 790. Our previous supply. We're currently kind of dropping supply within this little, finally set up a shop here between roughly 808 and 788, but we're flashing inventory off of that 788 area. The way that this is printing, it appears that it's trying to, but that is showing that another sell is coming, is possible. Or from wholesale perspective, that they're going to eventually look for cheaper inventory. But it doesn't mean, just because that's what they're showing, that doesn't mean that what has to happen. They can actually take it in the other direction. They've been building a lot of inventory off of that 788 area. So there we go. We're gonna lift the supply again. They were just budgeting, kind of getting some of it off quicker so they can build their whole stock of inventory. And that takes us back inside of NZ, back inside the neutral zone. Also keeping in mind that we have ISM at 10, another economic event. I will say though, this is some price action that I haven't, in all the years that I've been watching NQ, only NQ, this is a rarity for the price action that we've seen today. And let's just hope that it stays that way. If it doesn't, then you know we can adjust. On these days where I just can't find a good working trade, usually it's it has more so to do with me than the actual market. Today it was the market, from as I'm thinking about it now. Just not that the market was doing anything bad or good. I don't really do the whole bad or good thing, but it just didn't work out for my strategy today. As I'm saying it now, I'll do my review later. Maybe I did make a mistake, we'll see. But in all of that, I forgot the point that I was trying to make. Sometimes I got to get straight to the point. No, you didn't distract me at all. I distracted myself from over-explaining. Not a problem. Not a problem at all. And on that note, it's going to take us into the halftime. Sort of an earlier halftime than usual. But anyway, it's halftime. Take a quick break. And I'll see you on the other side. All right, welcome back. Welcome back. Nice another little response off the economic news, or use of the economic news. But anyway, this is Trader Triggers time. And let me get myself out of my ear. Okay. All right. So welcome back to the second half of Futures Trade Radio for this segment of Trader Triggers. So interestingly, how everything played out today. This topic comes at the perfect time in conjunction with what we've seen from this morning's session and actually this week. It's been a very interesting week. But so, and let me give a little backstory real quick. So today, what I'm going to talk about is something that I was triggered into a couple months ago, actually. And it was more so about, well, it's a combination of things. But specifically, the specific trigger was more so about a day where Bitcoin had one of its many pullbacks. And there was a podcaster that I was listening to. And in response to that pullback, in response to that red day, they were projecting a lot of negativity in terms of how they were projecting the possible future from that one day, right? So that's where this trigger actually comes from, just to give kind of a backstory. And why I chose this one for today, well, this week, I haven't really been paying attention. I've been kind of taking a break from like my normal routine of listening to things and tuning in to podcasts and watching YouTube videos on the market specifically. I've still been doing that thing, but just in a different frequency. So I say all that to say that I really didn't know what I was going to talk about today. And I had a couple things that I had already prepped, but I wasn't really feeling it. But then when I went back and looked into my archive and I found this one, I can see now in hindsight why I was led that way. But long story short, getting to the point, when I reached back into my archive, I found this one. And, you know, the feeling was accurate that this would be a good topic for today. And especially to start off this time of the year. So without further ado, today's Trader Trigger topic is everything is temporary. So I kind of mentioned what the trigger that led up to this, but also where this comes from is when I tune in and I listen to other people and I hear their reactions to the current state of the market. You know, there's a lot of fear and speculation about it. There's a lot of fear around the speculation as to where this market can go from here. And then I even see it when I go into, like I went into a room yesterday and I was looking at the people's responses when they were watching how the market was trading yesterday, and they were looking at, or they were expressing how they felt about the price action that they were witnessing. And you could see, like I could see through what they were expressing what the market was doing. Like I didn't even really have to look at the charts. I can tell, like just in unison with how the market was trading, you can see where the fear was. You can see where, you know, the speculation was how the market was trading. Like I didn't even need to look at a chart. I could get a clear picture of what the chart was doing just by looking at what other traders were saying about what they were looking at, right? About what they were analyzing. So, you know, that's just a fun little practice to do every once in a while. Like if you're, you know, want to get a deeper understanding of how this market functions and all of that, that can be a fun little practice to go and actually see other traders as they express what they are, observing and what they're analyzing based off of what they're trading. But getting back to the point of this topic, all right. The current state of this market can be defined as a bear market, right? And even that, I'm phrasing it that way because that has been a topic for debate lately. People having their own ideas about what defines an actual bear market. However, what has been less debatable is how much traders struggled in 2022. Right? I heard several traders talk about how difficult last year was, and then how other traders that have been around for decades, for a long time, how they also expressed how difficult last year was. Kind of getting started on the same sheet of music for 23. But a lot of people have been expressing how difficult, or they expressed how difficult last year was to maintain a consistent uptick in their P&L. Now, I kind of have a different alternative feelings about that myself. Like I say, I don't really look at things in good and bad. I kind of neutralize things, and I find the value that's there, because there's always value there. And actually, 22 I had a lot of growth, not necessarily in my P&L, but in my understanding of myself, my understanding of these markets, and just understanding of a lot of things by the way that the market traded last year. But at any rate, getting back to the point that I actually want to specifically address, also around the fact that my primary niche on this channel, as I project, is around day trading, but this topic also applies to long-term investing, right? But what I want to specifically address is all the worrying and concern that I hear when prices begin to drop. No matter if you're investing, and no matter what's being traded or whatever. That's what I'm actually going to focus on today, all the worrying and concern, and kind of provide a different perspective to look at, right? So let's look at this. I'm going to start this from a long-term perspective, as if you're buying and holding a position. If you're still in this market right now, the last thing that you want to do, in my opinion, is to panic, right? Panicking is a good way to participate in what I see as a wealth transference, helping the rich get richer, right? When you panic, when you start seeing prices go low and you start to sell because you're seeing prices drop and they're dropping quickly, and you start to see your portfolio, whatever gains that your portfolio had, you start to see all those gains fade away. You can easily get caught into panicking and start to sell off your things because you don't want to take any more losses. So I actually have a personal experience with this, to where I remember when I bought Facebook shares around the time of its IPO. And then, of course, how I normally do, how it usually works out for me, I bought these shares around the time where the price of Facebook started to decline, right? I bought it on pretty much right as it started to decline and started to find lower prices. And eventually I got to this point. I think I was like also changing over accounts. Like I got to open up a new account, and I was transferring my funds over to this new account. But basically I ended up selling those shares of Facebook. And now in hindsight, of course, I wish I would have held on to them, because they were, while in that moment it seemed like, I was losing money on that position. I was losing money on those shares of Facebook, and it seemed like a bad thing in that moment. But if I held on to it, now that would have been nothing, right? And I would have actually made so much more than I was losing in that moment. So on that note, in terms of these bear markets, so that was like a bear market just for Facebook because it wasn't a bear market at that time, but that was a bearish cycle for Facebook. But in these bear moments, when prices are declining, these moments present some of the best opportunities for growth because it's temporary. Now, barring the portion of the market that's forced to close losing positions because, they over leveraged and they're, trading on margin, they're trading with borrowed money, and they can't cover those margin calls when price goes too far against them, which is, in my opinion, the real drivers of like market crashes. The people that are actually forced to close positions because they over leveraged and they can't cover the cost of that leverage. But before I get too off the track, making mistakes during these rough periods are actually serving you in the future. So if you can keep going through the losses and the mistakes, the experience you gain will pay off significantly in the future, in the near and the distant future. Another great thing about these rough markets is at some point over time, it can't get any worse than it already has, right? At some point, you're going to find a bottom. So on that note, let me go ahead and let's think about what the worst case scenario that everyone is concerned about, which is everything going to zero, right? All the major drivers of this market going to zero. So imagine what that actually means if that happens. The whole reason anyone is even concerned about that is because of the money that they will lose if such an event happens. Well, this market is directly correlated with the fiat currency that everybody is concerned about losing. So if the market goes to zero, so does the value of what's currently considered to be used as money, right? So at the end of the day, it won't matter. If everything goes to zero, so does the value of the money that you're concerned about. So overall, you're probably better off just leaving your money in and coming up with a way to capitalize from the dip or from the decline. You could also take this time to learn a hedging strategy, to learn about hedging if you're not already familiar with it, and develop a strategy so that you can at least reduce the risk associated with this market cycle. Or better yet, you can come up with a strategy to where you can capitalize off this period of the market. And then for day traders, you can take this time to learn how to trade in both directions, right? So I see a lot of traders that have a bias towards one direction. A lot of it tends to be perma bullish, meaning that they're looking to buy low and sell high for profit. So for me personally, it's been better for me to just be neutral in it, like I always say, and I can trade and see the opportunities in both directions. And if for day traders, you can maybe even apply some sort of hedging technique with your day trading. Maybe you trade NQ for your day trades, and then you go QQQ for some long-term trading, so you can kind of offset if things just go outside of the strategy of your day trading, whatever day trading strategy that you're using, right? Or you can learn how fear is used to pull liquidity, then develop a strategy and a plan to benefit from those liquidity pools. But most importantly, in my opinion, of course, I got to keep saying that so that I'm clear about that. This is just my opinion. You can also use these times to build confidence in your system, but mainly confidence in yourself. Because if you can make it through these times, you shouldn't have a problem when the favorable cycle returns. And these are just cycles. They're only temporary cycles. So with all that being said, today is going to be a short one because it's really simple, right? But I would encourage you to get excited that You're here to experience what the vets, what the people that have been around for years and years and years and years, what they are referring to as a tough period, or as a tough time in the markets, or as a tough conditions to trade. Now, could prices continue to fall? Absolutely, they could continue to fall, right? It can get, it could get rougher, right? So to speak. But no matter what happens, even if prices do continue to fall, that would give you an opportunity, and it gives you plenty of opportunities of cheap prices and valuable lessons which you can use to rise as the market falls. Right? So that's the topic for today. And I appreciate each and every one of you for tapping in. Feel free to go ahead and share your thoughts and your comments in the comment section below. If you're watching this after the fact, you can even share your thoughts in the chat. It's always appreciated. I appreciate you, Tadishia. Hope I didn't mess your name up, for tuning in and asking all the questions and stuff. And I hope everyone have a good weekend, a good rest of your day. And until next time, trade it easy.